Bloomberg Tech is live from the heart of Silicon Valley with Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Palantir calls commercial demand otherworldly. We'll break down the data and AI company's blockbuster earnings results. Plus, Apple exceeds $10 billion in annual sales in India for the first time last fiscal year. We'll discuss what's driving surging demand for its devices in that market. And Palo Alto Networks CEO Nikesh Arora joins us to discuss the next generation of AI-powered cyber defense. You're seeing stocks at all-time highs, and it's technology that's leading the way. The Nasdaq 100 up for a fourth straight session, matching its run from the first week of June, and the S&P 500 is at all-time highs. There is a big technology earnings story driving that, and that is Palantir. Today's big number, $380.1 billion. That's the market cap of Palantir right now. This is a big gain in the stock. The share's up 25% or so, on track for their best day since February 2024. Best day since February 2024. These are the key numbers, and it's the US commercial business that's really driving it. US commercial sales came in $764 million, up almost 150% year to date. Overall, US revenue strong. And the big takeaway is the outlook for the year. They're saying that sales will be $8.15 to $8.16 billion. That's a few $100 million, even at the low end of the range, beyond the street's expectation. What's the biggest story? Let's stick with Palantir. Joining us now, Mariana, Perez, Mora, Bank of America Securities, Aerospace and Defense Analyst, reiterates a buy on the stock with a price target of $255 a share. What's so interesting is the US commercial business is partly being reflected right now. But actually, if you look at some of the bigger contracts that they secured, they don't call it a backlog, but there is a long way to go, and there's a big opportunity. And I was reading your note. That's why you've upgraded a lot of your estimates.
Yes. The U.S. commercial strength is just a result of what we have been discussing in the past. Palantir is positioned at the right place, at the right timing, to benefit from actually being able to operationalize all this AI momentum and all this AI demand. And U.S. is actually embracing that with the size of the contracts they are seeing is also very, very amazing. If you look at the trailing 12-month average spending per U.S. customer, that is up like 67%. And it's not just new customers that are ramping faster, but also legacy customers that have been using this orchestration or ontology for a while that are ambitious, and they want to actually keep incorporating the benefits of AI into their businesses.
Right. I always remind myself, what does Palantir do? Palantir makes AI-powered software that helps companies and governments either analyze their data or make decisions on their data or automate data-related processes, right? Simple as that. But the takeaway and the story that Alex Karp and Palantir want to tell is owning the means of production in the AI context. Are they showing evidence that they're helping customers do that?
Well, actually, when you meet at their conferences with customers are really happy about it. And the reality is that they have tried. They have tried to just implement it themselves, and it's not that easy. Palantir has been orchestrating not only this data analytics platform, but how the decision-making actually works with that. And all this human interaction with AI. It's really hard to have that digitalized, and Palantir has been doing that for decades. So customers are happy about it, and customers are actually leaning into that opportunity.
Palantir's US growth, 115%. Its international revenues growing at 33%. But Europe is a story there, right? Europe's much slower, and Palantir continues to kind of express open frustration about that. What's going on in that market?
I think what happened in Europe, particularly, I'm going to speak about what we do. We call Palantir from the aerospace and defense industry, and we're seeing that a lot. Post the Ukraine, there is this urge for European countries to don't depend that much on US technologies. They don't need to, they need to actually have domestic solutions. So it's the two phases of sovereignty, in my way, that is actually trapping Palantir in the middle. Because while Palantir actually gives a really good sovereign AI platform for you to own your IP, for you to be able to benefit from both like open models and frontier models, and actually have like all those learnings for yourself and proprietary data. On the other end of sovereignty, they are a really outspoken American company. So that's part of the noise. And
Mariana, you talk about part of Palantir's secret sauce being how they price. They price their offering on measurable outcomes. In other words, like, here's what we actually did for you. Now pay us this. How unique is that in this space?
I think that's starting to be more popular, and the FDEs and the ontologies are also getting more popular on other software companies' approach and go-to-market strategy. The difference is Palantir actually partners with their customers. They care about their problems, they care about their mission, and this is how they price their outcomes and they price their solutions. And this is why they are able to have, well, like 55% cash margins, because as they produce profits for their customers, they can also produce them for themselves.
Just real quick, ontology is basically the digital model of how a company's business works in the real world. Really quick, your price target is 255. There's about $100 to go. This is a turning point for them?
I do think Palantir is growing into that valuation. It's still like down versus last November peaks. And if you look at the estimates, it continued to actually execute not only in line with expectations, but even faster than expected. So I think that bodes like more than the market derating on general derating and also AI themes. Palantir is outgrowing that.
Mariana Perez Mora of Bank of America Securities. Great to have you back on the show. Thank you very much. There's two other companies we have our eyes on in the earnings context, Snap and Spotify. Snap's up 15%. And in their case, strong sales projection for a company that over the run of this bull market has not performed well. They see revenue jumping 20% almost to $1.6 billion in the quarter. Of course, everyone's kind of treading water a little bit for the launch of the AR glasses and the debut. Spotify, another stock that we're watching in the earnings context. So users climbed to 777 million in the second quarter. But basically, there's 5 million of you out there somewhere in the world that are not active users of Spotify, and Wall Street thinks that you should be. And so the stock's up 3%, but there's a little daylight between what Spotify's posting in terms of its user base and what the street thinks it should be hitting. Nevertheless, the stock is higher. Now, coming up, earnings continue. Grab, the leading Southeast Asian super app, reported its second quarter earnings yesterday, and Grab's Chief Financial Officer, Peter Oey, joins us next. This is Bloomberg Tech. Grab released its second quarter earnings yesterday after the closing bell. The Southeast Asian super app boosted its annual earnings and sales forecasts thanks to robust ride and delivery demand in the region. And here's how shares currently going, 3% on the US listed ADRs. Joining us is Grab's Chief Financial Officer, Peter Oey. Let's start with the demand story. You're basically pretty confident about the state of that demand picture on ride and delivery. My curiosity is around like how recent a change that trajectory is. Like what's happened short term versus what you were already seeing longer term.
Sure, yeah. It actually what's been really interesting was this momentum that we're seeing actually started beginning of the year. And when we entered the second quarter, especially in the March period, we were exiting Q1 with the fuel crisis and the war happening. We were actually revisiting a situation, what was going to happen in the second quarter, given Southeast Asia, we were the hardest impacted with fuel prices. But we didn't actually see that play out. Even though fuel prices went up, we leaned in fairly hard in supporting the driver community. We also leaned in helping the consumers with affordable rides. And what we actually saw was completely the opposite. Actually, we saw our rides grow at 28% on a year-over-year basis, one of the highest that we've seen. And we saw also our on-demand business, both on food and delivery, also on-demand GMV grew at 21%. So it was a very robust, very resilient ASEAN economy, despite some of the challenges we had with macro here in Southeast Asia. But also we also saw the marketplace very healthy at the same time and driving the profitability in the business.
Peter, the top of the Bloomberg tech story on Grab talks about the Southeast Asian commuter. What do those transactions look like for you in the period? Like, what kinds of trips are these? Are they, from the CFO's perspective, the kinds of transactions that you want to see driving top line?
Yeah, it was actually a very balanced the way we saw it. We saw the domestic commute still very strong, both in two wheels and four wheels. The rides were up 28%, which is very strong for us. We saw a lot of the 1 out of 4 new users coming in through what we call the Saver program, which is more affordable rides. But we also saw the premium rides also were up 90% on a quarter-on-quarter basis. So it was a really well-balanced portfolio all across the many cities that we're in here today. And I think that really speaks just the broad range that we have in terms of pricing capacity for our user base. They can enter through more of an affordable rides or more the premium rides at their choice, despite also some of the macros that we were seeing in Southeast Asia.
Right.
Now, also, if you look at food delivery, very, very similar also that we saw. We saw a very well balanced portfolio between what our Saver and also our priority delivery also.
On the technology side, you have AI-powered concierge, and you've introduced the ability to split the fare if you're riding with friends. The big question is, did that bring new users to the platforms? Is there anything tangible there?
Yeah, well, we introduced this new product called Group Rides, where you can share your ride with friends, split the bill effectively. We had it actually in our food delivery business, and we reported across through our rides. And actually, that really helped some of the affordability as friends were just grouping rides on the way home or going to work or going to a party, etc. And that really also helped the affordable rides part of our business. And that's great. But also at the same time, our airport rides was also very strong in the quarter. So despite some of those traveler impacted from canceled flights coming out of the Middle East. So it was a very, very strong Q2 despite some of these challenges.
Peter, just to end, the food delivery business in Southeast Asia is fierce, right, in terms of competition. There are the existing players, you've got new entrants coming. What is your plan to kind of keep ahead there on the tech side?
We're going to get you double down, Ed, on technology and also featuring a lot of the new products around AI capability. One of the things we are focusing on is on grocery delivery. And if you look at our GrabMart branding portfolio, which is really non-food delivery, that really grew at 54% just from the number of transactions. Actually, it was growing 1.7 times faster than our food. So consumers are really starting to embrace grocery delivery in Southeast Asia here. Still very early, very nascent, but yet we are seeing really good momentum, good traction there.
Grab CFO Peter Oey back on the show. Thank you very much indeed for your time. Another tech top story. For the first time, Apple exceeded $10 billion in sales in India, underscoring a widening retail push. Bloomberg's Dana Wollman joins us with the details. What's within this $10 billion, right? For a long time, we've been tracking Apple's traction in that market. It's a very different economy to others that Apple prioritizes. Give us all the info we need.
So in these numbers, which I should say were previously unreported before Bloomberg reported them, it was the iPhone products that were leading those sales. It turned out that MacBooks and iPads were up too, but really the iPhone, which is of course what the company is most known for, was leading that sales surge, up from $9 billion in the prior fiscal year.
There's another big report from Bloomberg on Apple, and that is that CEO John Ternus, well, CEO as of September 1st, incoming CEO, has brought in some talent, a leader for the management team, but it's somebody that had left, that had retired. Who are we talking about?
Yes, so Laura Ligros, who was his lieutenant previously when he ran hardware engineering. She was a vice president at that level. And it is unusual for Apple to bring back retired executives, but it will probably serve John Ternus well as he settles into this new role to reach towards someone who was so loyal and reliable in his previous post. And we don't know too much about what she will be doing. She will here too be a vice president, and we know that she'll be working in what is essentially a cross-functional, cross-disciplinary function, but it will go beyond just beyond her previous realm of hardware engineering.
And I think most people around the world of technology will know this, but remind us what is happening on September 1st, the big change in leadership at Apple.
So Tim Cook is stepping aside, not from the company, but he will hand over the reins as CEO, and he will become executive chairman, where he will focus more on things like high-level geopolitical relationships with foreign leaders, and that will leave the running of the company itself, the core business, to Mr. Ternus.
Bloomberg's Dana Wollman, who is our consumer technology editor at Bloomberg Tech. Thank you very much indeed. Let's stay with Apple. The company briefly removed the Telegram messaging app from its app store after finding content that violated a ban on child sexual abuse material. An Apple spokesperson said Telegram was restored, quote, after the developer promptly removed the content and banned the user who posted it. This year alone, Telegram said it removed more than 300,000 groups and channels related to such materials. Coming up, China's concerns are shifting to America's frontier AI models, what it could mean for US and China relations. This is Bloomberg Tech. Let's go over to New York now, where Bloomberg's Yahaira Anand is standing by. Yahaira, take it away.
Thanks, Ed. It's time now for Talking Tech. First up, prediction markets platform Polymarket is looking for capital at a valuation topping $20 billion. According to sources, Polymarket is in talks with prospective investors to raise $1 billion. The move comes just months after Polymarket closed an earlier round with investments from hedge fund D.E. Shaw & Co., underscoring the rapid growth of the prediction markets industry. Plus, Anthropic struck a $10 billion deal for computing capacity with cloud startup Volta Infra Holdings, according to sources. Volta is a months-old infrastructure startup backed by NVIDIA and founded by former executives from Brookfield Asset Management. The deal will provide Anthropic with computing resources from a data center in Norway managed by Volta. And Reuters reporting that the FCC is drafting a ban on imports of some Chinese data center components to protect the U.S. industry's infrastructure. The proposed ban on components, which hyperscalers, of course, heavily rely on to run and train AI programs, is aimed at preventing Chinese firms from installing malware or stealing data critical to the AI boom. Ed.
Thank you, Yahaira. The US-China tech rivalry is moving beyond chips. According to sources, officials in Beijing are growing increasingly concerned about Anthropic's frontier AI models, all ahead of a planned September meeting between President Trump and China's Xi Jinping. Bloomberg senior tech editor Mike Shepard joins with the latest. I mean, the direction of travel on this story is slightly different to those we've been covering in recent weeks and months, but this is China being worried about the leading US frontier labs and their models.
Well, that's right. And what we are seeing is almost the other side of the coin. Some of the arguments that officials in Beijing are raising really echo some of the arguments that we have heard in previous years from U.S. officials when they've complained about certain tech products, including TikTok, for example, and the national security risks that they pose through data collection and other means of sharing information with an adversarial government. In this case, the concern from Chinese officials is that Anthropic's Mythos and other powerful AI models could be used as offensive weapons against their economy in some fashion. And they didn't offer any specifics, but this is an issue that will be on the table very clearly. They have some misgivings over not having access to this model, but those are concerns that were shared by a number of U.S. allies in the weeks and months after Anthropic made that disclosure that its Mythos system in April was so powerful that it could only be shared with a small handful of trusted partners. And access has since been expanded, but it still remains small, and it has continued to be denied to China, of course.
If you go back to when President Trump visited China, you know, the hope of America's chip industry was that he would get some result for them so that they could more freely export lead-edge chips to China. America's concern on the chips has been, well, we don't want China's military to have access to that technology. that will help them in their own national interest or in their own national security context. What was the net result of any of that? Was it discussed in China? Will these topics be discussed in September here in the States?
Well, there will be a meeting ahead of whatever summit takes place between President Donald Trump and his Chinese counterpart Xi Jinping. And at that, the lower level officials, probably cabinet level for the U.S., likely Treasury Secretary Scott Bessent, who has taken an increasingly point position when it comes to matters of artificial intelligence and negotiations more broadly with China. They will discuss some of these parameters before the two leaders actually sit down here in Washington. And the concerns will all be on the table. It will be everything related to AI, including the chip curbs that the U.S. has gradually been easing, but perhaps not to the extent that China would want. While the U.S. is allowing sales of NVIDIA's H200s, for example, to Chinese customers, China so far really has not given the green light in the other direction for those purchases. So we will see some questions raised there. There will also be questions about whether Chinese AI companies themselves are engaging in unfair practices. Anthropic, for example, has accused Alibaba, one of China's biggest tech companies, of using a process known as distillation to unfairly gain an advantage and essentially copy some of their models. And of course, it's important to note that in singling out Anthropic, Ed, China is pointing to a company that does not do business in China, mainly because the CEO, Dario Amodei, has singled out China as a U.S. adversary and a threat to national security. So all of this dynamic will be on the table as the two sides meet even before the leaders sit down. We'll be wanting to see how they actually negotiate a lot of these intense differences over the way Chinese models have been developed and also some of the export and other curbs in place, including on rare earths.
Bloomberg's Mike Shepard, thank you very much. Coming up, we're going to get back to Wall Street's expectations for this week's big earnings. SpaceX, AMD, both coming after the bell. Let's go back to Palantir, the tech earnings story of the morning. The stock up 27%, on track for its biggest jump, its best day since February of 2024. $380 billion now in market cap. Big raise in sales and net income expectations for this year. And it's the US commercial business that's driving absolutely all of it. Okay, it's halftime here in the beautiful city of San Francisco and the Bay Area. Don't go far. This is Bloomberg Tech. Welcome back to Bloomberg Tech. There is some momentum in technology. I'm looking at the NASDAQ 100 up for a fourth straight session, matching the run of gains that it saw in that first week of June. 2.6% gain on the NASDAQ 100. A big driver of that is Palantir, literally the biggest points driver to the upside post-earnings. Palantir itself having its best day since February 2024. The S&P 500, by the way, is at all-time highs, and technology is a big part of that story. But earnings continue. Chips and rockets. Let's get to Bloomberg Tech's equity reporter, Carmen Reinicke in New York, with what to expect later today. Hi, Carmen.
Hey, Ed. So it's the moment we've all been waiting for since June at least. SpaceX will report its first quarterly earnings as a public company after the bell today. So we know the stock is down from that 135 IPO price. It's about 10% below, even though there's some green on the screen here today. And so what we'll really be watching for after the bell today is what the company says, not only about what it saw in the quarter, but its forward guidance. So much of SpaceX's valuation hinges on what it sees in the future. One thing we'll be watching for in particular is what it says about AI. Analysts on Wall Street have projected huge growth for its AI unit and see it taking up 80%, more than 80% of revenue over the next decade. So we'll see what the company has to say about this, if that matches up and if these models change at all. We'll also be watching for results from AMD. And really what I'm curious about here is if the stock can keep its rally going. So shares are up about 20% in the last week. We saw some weakness in the semiconductor space in about a month prior. And so AMD has a really high bar set for it. After its last earnings result, it had solid projections and the stock rocketed to a record high. So the setup here is super important. We're going to be looking to see if it's made any market share in sort of its competition with AI processing and NVIDIA that's what's top of mind, at least for me, what I'll be watching tonight. Thanks, Ed.
Bloomberg's Carmen, Reinicke, thank you very much indeed. Our next guest says that cloud revenue growth last quarter by hyperscalers like Microsoft and Amazon justifies continued heavy spending for the AI build-out. And we'll probably learn more about that with AMD's earnings later today. Let's get more. Celine Wu, portfolio manager on the global robotics and automation team at Lazard Asset Management, also PM on Lazard's next-gen technology ETF ticker, TEKY. Welcome back to the show.
Great to be back.
I mean, at the end of the day, if the spending is justified and the spending is going to continue to grow, AMD will be a beneficiary of that. You know, I find the chronology of earnings interesting. What do you think we'll learn from AMD about the future?
Yeah, I mean, obviously, the hyperscaler earnings that we have seen so far has laid out the groundwork that all the relevant hardware semiconductor value chain will tremendously benefit because we continue to see that demand cannot, basically there's a supply that cannot compete to meet the demand. So definitely really interesting to see how they're evolving that in terms of their revenue and their addressable market they're seeing, especially for the CPU, that can benefit as a core driver of the growth in the inference demand.
AWS CEO Matt Garman was on the show yesterday, and I tried to push him on what the CapEx number for next year will be, whether it will be higher in simple terms. That's on the spending side. On the growth side, also what's driving it, and he was pretty clear, it's a shift to inference. Training load's still there, but inference is now the driver. Do you see that in your research?
Yeah, absolutely. Like a lot of companies are highlighting that the mix shift to more inference workload, especially on the back of the growth in the AI agentic workload, has been a boon for the demand in the growth. Not just AWS, I would like to highlight that the same pattern has been seen in the two other important hyperscalers, including Google and then Microsoft as well. I mean, it's truly impressive how the three companies have delivered combined 50% rate of growth just this quarter, which was double the rate that we have seen just 5 quarters ago. Very strong validation for AI ROI, continued commitment to spending because they're seeing extended backlog of the customer visibility, which is a really important barometer for the investing in AI.
All three of those, Alphabet, Amazon, Microsoft, are members of TEKY. If you were going to do a scorecard from last week's earnings across the hyperscalers in the week prior, who came out on top of those three?
Well, it's hard to pick, but I would say Microsoft and Amazon definitely relative to the expectation. This quarter was truly impressive because all the three delivered something much better than expectation. That was pretty impressive in my view. And then I think people have to be comfortable and understand that by nature, this large spending commitment has to be taking place upfront. But over time, you are going to see the tangible numbers flowing through their core businesses. And this quarter was fantastic to prove that point.
Celine, if there's something in aggregate across all of the companies that you track and that you include, it seems to be that demand is still running ahead of supply, be that cloud capacity supply, literal chip supply on the basis of the compute. Is that a good thing? And how long do you sort of see that lasting for?
It's a great thing, but at the same time, it's a balancing act that entire supply chain has to work around to make sure, yes, when there's a strong demand visibility, they have to make sure that they can supply all the necessary components in time so that growth does not taper off. I think it's often underestimated how much amazing job this entire supply chain is doing just to make that happen. For example, the LTA that is taking place in memory space, for example, I think is a great example to make sure that the long trajectory for demand and the growth should be there. And that is something truly different and unprecedented this time.
So let's linger on that for a second. Long-term agreements in memory are atypical against history, right? What's happening, based on the conversations I've had recently with SK Group and as well with Jensen Huang is it's the customers saying, hey, let's do a 5-year deal. That hasn't happened historically. Just again, what does that signal to you? Why is that noteworthy?
It is noteworthy because it basically proves the point that there's an extended visibility from the customer demand, and there's basic preemptive efforts to make that happen so that supply and demand go hand in hand in balance to make that this truly impressive once-in-a-generation growth opportunities is coming from AI. We have to remember that all the visibility is actually coming from the upstream. If you think about TSMC, for example, the largest foundry in the world, I would argue that this is the company that has the best visibility when it comes to customers. And guess what? They just announced committing to additional $100 billion in CapEx to expand in Arizona in the U.S. In conjunction with hyperscalers, I don't think they're spending money blindly. They're talking about they can actually see the demand that can stretch out to the 5 years. That's why they're committing to spend today, and that's why they need to make sure all the supply chain, including the memory companies, to just pace together to make that supply and demand come in balance.
Celine Wu, Portfolio Manager at Lazard Asset Management. Great to have you back on the show and here in San Francisco. Thank you. Now, coming up, we're going to speak with Palo Alto Networks CEO, Nikesh Arora, about the next generation of AI-powered cyber defense. But actually, I think a whole lot more than that, too. The CEO of Hugging Face will also discuss the risks posed by rapidly evolving AI models. This is Bloomberg Tech.
Sometimes we ask agents to think outside of the box, but we don't want them to think outside of the sandbox.
As AI makes cyber attacks faster, more sophisticated, Palo Alto Networks is launching PanOS 12.2 series, a major software update featuring advanced virtual patching, an AI-powered tool designed to identify vulnerabilities and stop attacks before traditional software patches are available. Joining us now, Palo Alto Networks Chairman and CEO, Nikesh Arora. This is basically like an AI-powered series of network agents, right? Let's start with like what they do. But I've found of the last 12 months where AI and cyber cross over, the best questions to ask, what is the problem you're trying to solve for here, Nikesh?
Great. Well, nice to see that. Look, first and foremost, as you've seen, there's a lot of conversation in the market of AI's capability in the space of cybersecurity. What we're doing is we're effectively sort of rebuilding the operating system of network security for the future. I mean, imagine having a car in the past and imagine wanting to create the next Tesla. We're basically creating the plumbing in our network products, which allows to build a Tesla-like experience for cybersecurity where our products will start to do a lot of things for you using agents, using AI. And that's kind of what the fundamental of series launch is. In addition to that, I think one of the biggest features we have as part of series is, as you've all heard about, all the AI models beginning to show vulnerabilities and start allowing attackers to attack faster. Well, the average time it takes to patch vulnerability is 55 days, right? We don't have 55 days when AI finds the vulnerability. AI wants to attack or exploit the vulnerability as soon as it can. So this release allows us to take a lot of the patches, the vulnerabilities that we found, and build patches in minutes and hours so that we can provide patching capability to our customers in a short period of time to eliminate that 55-day wait that has traditionally been sort of the industry average.
In what you published this morning, there's a lot of background and research onto what you were looking for. And in one case, in a review of open source software, your team talked about sort of 14,000 vulnerabilities. Yes. What you were just talking about is essentially zero-day vulnerabilities, right? The window between discovery and exploiting a vulnerability is now zero. That is a surmountable challenge.
You want to get it shorter? Yes.
Yes, please.
No, I think, look, you're right. The possibility that AI shows you, whether it's the new models you've seen from OpenAI or from Anthropic, you see that AI agents are able to discover vulnerabilities, come up with attack paths, figure out how to concatenate a bunch of vulnerabilities and attack the customer's infrastructure. Now, we need to figure out how to respond to that at the same speed at which AI is discovering these vulnerabilities. We don't have time to patch. So what we've done is we basically built the capability in our software, and we have a research team researching for vulnerabilities that we build patches as fast as we can. We've kind of gotten the patch process down to 4 hours. We expect to bring it even shorter with products like what allow you to create sort of instant patches. But that shortening from 55 days to 4 hours is a big step, which is what part of the release that we just launched allows us to do.
The biggest story of recent weeks is two advanced OpenAI models escaping a sandboxed environment, gaining internet access, and mistakenly accessing Hugging Face's platforms. And lots of people in your field... Mistakenly, I'm being careful with my choice of words. But, people in your industry basically put this as a watershed moment for AI in cyber. I really want to know what you feel about it.
Like, as you can see, a lot of frontier model companies are flexing. They're showing the immense capabilities of what AI models can do. And this is true that we had an incident where an AI model using agentic capabilities was able to escape its sandbox and be able to go ahead and attack sort of infrastructure of effectively Hugging Face to go look for exploit Jim sort of capability. So I think what it tells us is, one, AI models are going to be more and more capable over time from a cybersecurity perspective. I think, two, it's a lesson for our friends at Frontier LLMs to make sure that before they create capture the flag exercises to go find something in their external infrastructure, they should probably make sure that their sandboxes are secure and they are not suffering from any vulnerabilities before they start pointing the models outside. I think from a more industry perspective, as you saw, what we have to do is we have to start fighting this notion of AI with AI on the defense side. So a lot of work has happened on the offense side, and offense is always easier. I think we have to spend a lot more effort on making sure that there's defense capabilities. And I've said that in the past. I said 4 months ago that I expect this capability to be around in 6 months. It looks like it showed up in 4 months. So we have now seen attackers can actually effectively take these models and the capabilities that Frontier LLMs provide, which I think is going to become commonplace over the next 3 months, where we'll be able to find open source models out there which will have similar capabilities as you see those models getting distilled. So I think that it's sort of incumbent upon us to make sure we build the defensive capabilities while we have the time to be ready for these sort of attacks to get faster, more efficient, and more quicker.
Nikesh, what is the token economics consideration where AI is increasingly used in the form of swarms of agents in defense?
Like tokens, I said a few weeks ago that I think tokens are overpriced. I think part of the challenge is that the whole host of AI infrastructure for consumers is being paid for by enterprise. I think token prices need to come down to the tune of 80 or 90%, which will allow all of us to both use AI effectively for products that we're building for our customers, or perhaps for doing drug research, or perhaps making organizations more efficient. So I think we'll see that. We already saw this past week that some of the frontier models have given us better pricing from a token economics perspective. Now, you will see a lot more tokens being used. You will see a lot of us use tokens in our products. You'll see us use them in our business processes. I was talking to somebody yesterday. I think it's not unreasonable to expect that 10 to 15% of our OPEX in the next 10 years is going to move towards AI or IT or tokens. So that's a big number. 15% of OPEX will effectively move. And I think that's where we're headed from a token economics, token math perspective.
Nikesh, finally, before we let you go, there are reports that you are leading a group or a consortium to purchase an NBA franchise in London. What can you tell me about your plans for that, please?
I think it's very important balanced work and play. And not getting any younger, need to make sure that while we're working hard to make sure we do what we do in our day life, we have to make sure we find time to be able to follow our passions. My son's passionate about basketball. I'm passionate about basketball. We have a cricket team in London, me and a bunch of my friends. I think part of the conversation was, can we actually see if there's another opportunity to make sure that we can make basketball relevant in Europe as part of the NBA's efforts? So we have an aspirant bid in there. We'll see. There are many people who are interested in the asset, and hopefully the best team will win.
Nikesh, just asking for, I guess, the Bloomberg Tech audience, how much does an NBA franchise in London set one back?
I think, what does it say? What's the price of something? What somebody's willing to pay for it. So we'll find out.
Nikesh Arora, Palo Alto Networks CEO and Chairman, it's great to have you back on Bloomberg Tech. Thank you very much. He didn't say no. Let's stick with cybersecurity. Hugging Face CEO Clem DeLong told Bloomberg that the recent OpenAI-linked cyber attack could have been much worse, and that the use of open-weight models was crucial to defending the platform.
We defended ourselves with an open model, right? And some of the guardrails prevented us from using Frontier APIs to defend ourselves. So kind of like improving the tools for defenders, instead of obsessing about not giving them to attackers, I think would be a good thing in the future to make sure these incidents are not too harmful.
Okay, coming up, another tech-focused hedge fund sinks as results of July's AI-linked sell-off. We'll discuss what's weighing on Coatue's funds next. This is Bloomberg Tech. still keeping an eye on shares of Palantir, up almost 27%, on track for their biggest jump since February of 2024. A big raise to the outlook, both on the top and bottom line for this year. Lots of strength in the commercial business in the United States. In fact, most of the growth coming from the United States. Internationally, a little slower, 33%. But there's a lot of potential here for Palantir, and the market very excited about it. Let's talk about hedge funds. Last month's AI sell-off has hit another tech-focused hedge fund. Coatue Management's fund plunged over 8% in July. Its worst month in a year, though the fund remains up 14.3% year-to-date, according to a source. Let's get more on what's driving it and the impact from Bloomberg's hedge fund reporter, Hema Parmar. You know, what happened in July? AI and chip stocks sold off pretty heavily. Is that the story here?
Yes, exactly. It's a concentrated AI bet. Coatue has long been bullish on the sector, and 4 of its biggest holdings in the trade have worked against it. You're seeing huge declines on Taiwan Semiconductor, GE Vernova, Lam Research, and Applied Materials, some of them sinking as much as 29%. So this is part of what, pulled down the fund's performance to the worst performance in over a year for the month. But yes, as you mentioned earlier, the fund is still up 14% on the year.
The Philippe Lafont thesis is that there is a super cycle in AI coming.
Yeah.
Any deviation from that after July?
I can't imagine that he would have changed his perspective, which he's held on to for quite some time. He has experienced volatility earlier this year. They were down 5% in March, given the tumult in the Middle East. They also posted a return in May, its best return in like 25 years, when they gained 14% in that month alone. So look, it's been a roller coaster for investors in this fund, but you do know what you're getting when you invest in Coatue. And it is this sort of long-held vision that the future will be AI-driven, that there is this super cycle to come. And I can't imagine that this 1 month would have changed his perspective. Who knows? He may have bought the dip as well.
Right. Let's go back to the year-to-date gain, 14.3%. Like, where does Coatue sit in the sort of group of other hedge funds that you've been able to track?
Yeah, good question. So when we look at the spread of the sector, we have Tiger Global, Coatue, Viking, Lone Pine. We call these firms the Tiger Cubs because they came from Julian Robinson's Tiger Management and have spawned their own firms. And so when we look at, say, there is some divergence, right? Viking Global, for example, a lot more cautious on the AI sector, really pulling back those shares, not as exposed. That would have helped them in a month like last month. But they've also said that that's meant some missing out on some gains that other firms have really taken advantage of, like Coatue, like Tiger Global, and to some extent, like Lone Pine.
A conversation for another day, but also point out we see Coatue a lot on the cap table in some private rounds of private companies too. Bloomberg's Hema Parmar, great job. Thank you very much. That does it for this edition of Bloomberg Tech. We have more earnings after the bell today. AMD, SpaceX, its first quarterly earnings as a public company and first call. A real big focus on Elon Musk and whether the question of a SpaceX Tesla merger gets posed. Also Paramount, and then tomorrow Uber and Disney are ones that we're watching as well. It is a session that's kind of been dominated by Palantir's earnings, but basically stocks at all-time highs on the S&P 500. Technology is leading the way. How does earnings impact that? So much to recap on the pod. You know where to find it on the Bloomberg platforms, as well as online on Apple, iHeart, and on Spotify. Let's keep it going. This is Bloomberg Tech.